Let's go to Tom Piotrowski over at CommSec for a look at the markets today. Tom, we've got that breaking news from the US Fed Reserve overnight. Despite bank failures from Silicon Valley Bank, from First Reserve, forgot the name of it now. You can help me out with that one. But a few others as well. First Republic. The Fed Reserve decided to lift rates. So how's that going to be responded to?
Look, to be frank, the Fed's decision was an uncontroversial one. The raising of rates by 0.25% was widely expected, and that took place at 5 a.m. Sydney time. The press conference 5:30 kicked off. Jerome Powell really navigated the conversation quite well. It was short and sweet. But then as we approached 6 o'clock local time, Janet Yellen was also speaking in the US Senate, and she seemed to be walking back some comments that were made previously around the government's consideration of fully bank stopping US bank deposits. And that headline a couple of days ago was quite important in terms of stabilising the concerns around US banks. So that was really the nub of the issue this morning. It was less about the Fed, more about those comments. So US stocks were doing pretty well. We had the S&P 500 up by about 1/3%. Everything's sold off since then, but it's the bank stocks that have been leading the charge. All of the leading banks in the US are down in the order of around 2% as we speak. Now the KBW Bank Index sold off on the back of that suggestion as well, down by around 3.6%. So a little bit of back to the future. But long-term interest rates have also fallen quite dramatically. So even though Chairman Powell spoke confidently about the position of US banks and spoke about the need to attend to inflation, US interest rate markets are pricing in 0.5% of rate cuts by the end of the year. So certainly it's still a lot of caution around. And so on the back of all of that, we'll kick off with a loss of about 1/3 according to the SPI futures at the moment.
Despite all that, I would have thought that this now just gives ammunition to Philip Lowe to jack up the interest rates here next time. Am I wrong, Tom? Just quickly.
Well, Pete, overnight we saw some stunning inflation figures in the UK, rising, having fallen for the last 3 months, 10.4%. The Bank of England decision tonight. There's every chance that the RBA could still raise rates by 0.25%. Markets at this stage are pricing that they'll do nothing. But next week we'll have retail sales and inflation numbers to look at, so they will play a big part in determining what happens when the RBA meets next time.
All right, Tom Piotrowski, appreciate that. Thank you.